Righty, morning everyone. Thank you for joining us, especially at such short notice. I'll hand over to Stu to get started, although maybe give it a minute for people to jump on, as there's quite a few people piling in at the moment. Over to you.
Yeah, thanks very much, Emma, and welcome everyone this morning to Strike's webinar around the release of our South Erregulla reserves and corresponding power project, which we have made a submission to the AEMO to build an 85 megawatt peaking gas power station. The project itself, so as you can see, the South Erregulla appraisal results, which were disappointing at South Erregulla 2 and 3, have resulted in a commensurate reduction in the 2P reserves of the South Erregulla field and a recategorisation to the eastern side of the field from contingent resources to prospective resources. But that's happened in we've correspondingly changed the development project from the standalone domestic gas project now to a South Erregulla peaking gas power station, where we have made a submission to the AEMO to capture the potential for an 85 megawatt power project to be developed on the precinct on Strike's wholly owned 3,500 hectare land parcel that sits above the gas field. That facility will look to take an FID on that by November. There are significant news flow events between now and November that will de-risk this project, and the facility itself will commence electricity sales in October 2026. Whilst the reserves are somewhat 40% of the total estimated pre-appraisal results, the opportunity to integrate our gas field into a peaking power station can generate up to 5 times more revenue per unit of gas, as you can see, with potential generation of revenues of $40 to $50 million per annum over at least the first 5 years. The reserves itself, a 1P reserve coverage is over 25 years for the project, so this is a very long life and critical part of the Strike business now, where we'll look to generate a substantial amount of free cash flow over a very long and extended period of time. For anybody that works in infrastructure or knows the infrastructure game very well, these peaking gas power stations, particularly when there is a gas supply secured to them, can be very, very valuable over a long time. What we want to go through today is some of the strategic rationale of why we are looking to take South Erregulla from its domestic gas project and put it into the peaking power market as we have submitted today. And so this is a commitment from the company that on the basis that we receive our capacity allocation as well as our network access quantity, we will proceed to construct and operate this gas plant. This gas-fired power station, as you can see, 2 charts here. The first one on the left demonstrates the market being broadly underbalanced for the next 10 years. There is significant amounts of new capacity required to come into the West Australian electricity market. The project itself is based in the SWIS, which is the Southwest Interconnected System. That's an area of generation that supports about 4 to 5 gigawatts of demand and spreads from Geraldton to Kalgoorlie down to the southwest corner of Western Australia. So predominantly most of the electricity consumed in Western Australia is within the SWIS, where we have a geographical advantage. So this power station comes at a very critical and unique time for the state, as the state government has committed to reduce and turn off the coal-fired power in Western Australia, which is operated by the state government-owned Synergy. And you can see that on the chart on the right-hand side. About 30% of West Australia's generation capacity is being phased out and predominantly being replaced by renewables and batteries, as well as gas-fired generation. New gas-fired generation is needed in the state, and the government this is off the back of peak demand rising at about 3.7% per annum. We saw the electricity statement of opportunities released only last week, very timely, and that demonstrates that all government is sitting behind the need and requirements for this new gas-fired generation. When you look at and break down where the gas generation is in the state and where the age of some of these facilities, Wouldn't surprise you, but a lot of them are quite old. We've seen, the majority of gas-fired generation in Western Australia is between 15 and 34 years old. In the north end of the Swiss, which is generally where a lot of the wind energy is produced, there is currently no peaking gas power facilities that are online as we speak. There's currently only black start opportunities, and that black start is over 34 years old itself. So this is a really important piece of infrastructure to firm the northern end of the Swiss. And Strike is taking advantage of being a very first mover here and being able to capture the available network access quantity on approval from both AEMO Western Power for that 85 megawatts. This is a really important slide because it really takes a series of the company's very strategically advantaged assets and brings them all together. What you can see here in the yellow line is the farm that Strike owns, or Kingia Plains as we call it, otherwise known as the precinct. And that will transition from a farm over time into an industrial precinct, starting with the development of the South Erregulla Power Station. This is 3,500 hectares of land where the South Erregulla gas field sits beneath, and you can see the production license L24 sitting over the top of that gas field, denoted in the black line. And this piece of land is very uniquely placed as it's currently within a short distance of the existing 132 kV line that runs about 10 kilometres past the north of the farm. And then over time, the state government has committed to expanding the 330 kV network in the area where that surveyed corridor, as you can see in the red, runs exactly alongside the farm, along the precinct, and then up towards Geraldton. So there's a really interesting opportunity over time to potentially expand power generation, but we will be starting with a connection into the 132 kV line across two farms north of the precinct and then into the South Erregulla power plant. One of the advantages of that Strike has in this situation is that we have in Swiss resources. South Erregulla represents an interruptible gas supply, which is a very difficult gas agreement to try and secure if you're a power generator. We've got the ability through our conventional gas at South Erregulla to turn it on and off and operate the power station in its peaking capacity. And this is also an area where the traditionally large producers of domestic gas in Western Australia from the Carnarvon Basin cannot operate. They don't have an interruptible gas supply inside of the Swiss. They would need to put their gas into the pipeline and send it down, which would obviously carry significant overhead capacity charges and delivery charges. So this is a really strategic development for the company. It is something that the company has been looking at for quite some time. And through the advent of the smaller reserves that we saw at South Erregulla, there's a great way of taking a smaller amount of gas and making it incredibly a lot more valuable. That's demonstrated here in these two charts here. First, the one you can see is where peaking gas prices in Western Australia have been trending. We've seen a 130% increase over the last sort of 5 years or so of peaking gas power supply, and that currently sits at over 100% just using the last data that's come out from the AEMO. And that's a function of the lower reliability of the state's coal-fired power, the desire to start winding that back, the increase in intermittent renewable generation. We have a very high amount of solar penetration here in Western Australia, as well as wind generation. Our wind generation is great. However, there are times throughout the year where we do suffer from wind droughts, and this is exactly when this power station will be turned on to operate in a firming capacity to that wind and solar. You can see the spark spread on the right-hand side. Independent modelling for the project shows that we should be able to achieve an average realised price of around $140 a megawatt hour. Currently in Western Australia, we have a cap at around $740 a megawatt hour for power prices. That cap is being reviewed to potentially take it beyond $1,000 a megawatt hour, and that could increase the value of the spark spread. That spark spread is demonstrated on the waterfall chart here on the right-hand side, where you take a traditional domestic gas gigajoule around $8, And then your conversion to electricity is, enormously value accretive, over 100%, where your realised sale of a gigajoule incrementally outside of the capacity payments and the ancillary services can generate a look-through gas price of close to $18. This is a really exciting place for us to look to monetize our gas. We'll be selling our gas into the wholesale electricity market, where effectively the AEMO, or the West Australian Government, is the purchaser of that electricity and redistributes that into the sales network on our behalf. So it's a very simple operating model. It is a great way to take our gas and increase the potential revenue generation per gigajoule of gas over the life of the field. We're currently looking to use reciprocating gas engines, which have around 8 gigawatts per megawatt hour, and so that's how you get from $140 per megawatt hour to a total realised price of $18 a gigajoule. The revenue in the project is broadly underpinned by a change in the way that the West Australian electricity, or the Southwest Interconnected System, is operating. The market has changed from being an unconstrained network to a constrained network. And so what that means is that typically, if there was 100, if a transmission line was full with renewables, no one else could connect to it. However, the market has recognised that there are times when those renewables are not operating or not generating energy sales, and that allows Strike to connect into that line without significant network augmentation costs and produce electricity as and when those renewables are not coming on. And that's been underpinned, secondly, by a major change in the system, where the state government has moved to a reserve capacity mechanism. That reserve capacity mechanism is an incentive for new generators to build new generation capacity. That results in a reserve capacity price. Currently, the reserve capacity price in Western Australia is about $230 per megawatt of capacity per annum, paid by the West Australian Government to generators to be ready and available to come online. So a lot of the revenue of the $40 to $50 million, about 40% of it, is actually underpinned by reserve capacity payments that are modelled to be between $180,000 and $230,000 per megawatt per annum of capacity. That capacity, so we've applied on Friday evening for that capacity, and for a network access quantity of 85 megawatts, which is the total available line capacity on the 132 kV line, 10 kilometres north of the precinct. That capacity will be informed in August whether we have received that capacity, and then we'll be informed in October of the pricing of that capacity. As I said, our independent modelers have come up with between $180,000 and $230,000 per megawatt per annum of capacity. However, there have been significantly higher numbers published by other potential market participants. That $40 to $50 million, as I said, is underpinned by 25 years of 1P reserves coverage. That's P90, 1P reserves coverage, where we are looking to consume about 1.3 petajoules per annum per year. To give you an idea of the rough changes in economics from gas fields to electricity, Walyering typically produces around 25 terajoules a day as it stands today, for a revenue on a daily basis of around $200,000. South Erregulla's peaking power station will generally produce around 4 terajoules, or will consume about 4 terajoules of gas per day, and to generate up to $140,000 per day in revenue. So a significant uplift for a smaller amount of gas, which is exactly where South Erregulla needed to go post some of those disappointing appraisal results. When and if we are awarded our capacity and our reserve capacity pricing in October of this year, we have the opportunity as a new generator to lock in 5 years of that pricing plus CPI. There is a potential for the legislation to change for up to 10 years to be able to lock that in, which would underpin a very long-term, very stable series of defensive cash flows and really good economics for this project. But we are waiting to observe those potential changes to the regulatory regime. However, at 5 years and where we see the current reserve capacity pricing potentially coming through in October this year, $40 to $50 million per annum for that 5 years, plus then into energy sales up to 25 years, is a really great way to monetize this South Erregulla gas. The project has submitted its application to develop this project to the state government, to the AEMO and Western Power. The capital estimate, which is a Class 3 estimate, is currently between $120 and $160 million. Those numbers will firm up as we move to an unconditional FID in November, post the award of our network access quantity, the reserve capacity price, and our reserve capacity credits. The project itself will be made up of about 4.5 megawatt reciprocating gas engines. Those engines are very conventional, normal technology used throughout Australia and Western Australia. There's a large amount of them deployed on mine sites around WA, providing baseload. And those reciprocating gas engines are used internationally in a peaking gas capacity. So, there's very low technology risk on what Strike is doing here. These engines would typically also be the engines that you would power things like compressors at gas plants. So very common pieces of infrastructure to find on a gas field development. We'll also build additional flow lines from the South Erregulla 1 well to the power station, up to 2.4 kilometres of flow line. And that will give us 60 minutes of ramp up and ramp down, or 1 terajoule of line pack capacity, which will allow us to manage the flow of the well or wells, as we plan to drill a second well in at least the second year of operations of the facility. That second well could be South Erregulla 4, drilled between South Erregulla 1 and the northern end of the permit, or a potential sidetrack of South Erregulla 3. As denoted in the South Erregulla reserve statement this morning, there still remains upside potential in the western side of the South Erregulla field. We're continuing to do our work to understand the likelihood of that potential. We saw some positive news recently from the Trig Northwest 1 flow test, which did produce gas to surface, which is up dip of both the South Erregulla 2 and 3 wells. And so there is a potential for us to capture prospective resources and convert those to reserves in the western side. Otherwise, we would look to drill a dedicated producer in the existing reserves on the east. The operating costs of this plant are very low. We're looking at about $1.5 to $1.6 million of installed capacity. That's really, really great, and with only a operating cost of $5 to $7 million, and that excludes Strike's transfer of its gas from its upstream to its midstream venture. Due to the prolific wind generation in the area, we model independently only an 18.8% capacity factor of this power station. That means that when the wind generation in the region is low, we will be looking to come online. If you look at the corresponding power price in Western Australia, generally when wind is high, power prices are low, or when solar generation is high, power prices are low. When wind is off, that's when you get those peak power prices. As I said, regularly throughout this year, we have been seeing peak power prices generated in Western Australia. In fact, 7 of the 10 highest demand days of all time have occurred in 2024, and that's just showing you the change in this network and that potential of generating those upside revenues from this facility. The reciprocating gas engines are a much faster way of coming online than a turbine, as well as they have a very high degree of short-term efficiencies. And we can see about 8 gigawatts per megawatt hour. So that's how you build up your spark spread. Like I said, 25 years of 1P reserves coverage. And this project takes advantage of a large amount of the existing approvals that we had achieved for the South Erregulla domestic gas project and converts them across to the power project. We have the state government, recognises the need for this new gas generation, and it certainly recognises and wants third parties to build that generation. And we've got a great amount of support. We've got lead agency service from the Department of Jobs, Tourism, Science and Innovation, and we've also got letters of support from both Western Power for our connection, as well as the Deputy General Director of DMIRS in support of our approvals timeframes to meet our online date of October 2026. Key dates for investors to take note of: August, which is not too far away. Post our submission on Friday evening, we'll be notified by the AEMO if we have been awarded capacity, and we will be required to pay a 25% deposit of those potential capacity credits. That's about $4.9 million, which is refundable should we not receive in November our network access quantity that is required. That network access quantity is for 85 megawatts. Our minimum network access quantity is 75 megawatts, and we will also be informed in around October through the publishing at AEMO of that reserve capacity pricing. So all the economics start to firm very strongly in that October-November timeframe. We're still working through bringing some of the costs right down of this project. As I said, the mid-case estimate's currently sitting at around $130 million, but we do recognise that construction costs can be uncertain, as well as wanting to make sure that we meet and beat our targets. And so we're still forecasting between $120 and $160 million of potential capital. Commercial operations will commence in October 2026. If the power station is built in advance of October 2026, we will be able to turn it on. However, that's the reserve capacity years that we have applied for. So we will be receiving reserve capacity credits or post-October 2026. The funding of this project, as announced last Friday, Strike secured a meaningful size development facility from Macquarie Bank of $153 million. That is made up also of $53 million earmarked, dedicated towards the South Erregulla Power Project. That power project, is supported by this debt funding, as well as Strike's free cash flow generation coming out of its Walyering asset. And so the company is in a great position to be able to build and develop this project from the financing that it's currently got access to, as well as keeping the facilities full at Walyering. It's been a really busy last few months. I know that things didn't start off the year the way that we quite wanted to see them with the South Erregulla appraisal results, but the business is committed to restoring the value and the share price that we have come to know. And you can see just how we are taking the catalysts that are in front of us. We're in the middle of a really exciting drilling program where Walyering 7 has been successful, and we're looking to tie that in to the facility and commence the testing any day now, as well as we've committed to releasing this development review at South Erregulla, as well as the reserves. Many analysts out there have discounted or almost written off South Erregulla, and so to be able to show today that there is a long life, highly valuable, high free cash flow generating project at South Erregulla, I think should be taken as a strong positive by the market. In the coming days, we will also spud Erregulla Deep 1 in joint venture with Hancock, Booth 1 in joint venture with both Triangle and New Zealand Oil and Gas is slated for July. And then we're looking to bring some of those Walyering volumes into the Dampier to Bunbury natural gas pipeline through the Mondara interconnect that we secured with APA earlier in the year. Unfortunately, the domestic gas policy update has been delayed again to August. We are continuing to use that additional time to make sure that there is an open and free and transparent market for Strike to be able to sell its gas on equivalent terms to that of its competitors. And we will wait and see what the results are when that comes out in August. The West Erregulla project continues to proceed towards its Q3 FID target with Hancock, and that is, we're looking at ministerial environmental approval being secured in the very near term, and that takes us towards closing out the midstream agreements required with Hancock and Australian Gas Infrastructure Group towards our West Erregulla FID. And then there's a potential well slot towards the end of the year where we may look to drill an additional Walyering well or an Ocean Hill well. We're just waiting on seeing the results of Walyering 7 before making that decision. It's a really big announcement today. There's a lot of detail in there. We wanted to make sure that you, as the investor community, could be able to see the value attributable to converting our South Erregulla gas to power. And so there should, over time, I suspect that you'll see a positive response to today's announcements, which, I think there's been a lot of hard work. And as I said, those submissions have gone in today. This is not Strike wanting to do something. This is Strike doing it. And I think that actions will speak louder than words over time. I'll throw it over to some questions. Thanks, Emma.
Thanks, Stu. Yeah, thanks, everyone. So we have recorded this session. So anybody who jumped on late, we'll chuck this video up on our media page as soon as possible. We do have time for some questions. If anyone wants to use the Q&A chat button and type their questions in, I'll ask them to Stu. We've got quite a few that have come through already. Dale Kunders is asking, so 1.3 petajoules per annum, even accounting for the 18% utilisation, is implying a maximum flow rate of less than 10 terajoules a day, which is significantly lower than the 80 terajoules a day rate achieved from the flow testing from the South Erregulla well. So also considering that the project has 1P reserves coverage means that the 2P reserves will not be produced over the life of the asset. Is the project undersized, and how do you plan on monetising all of the 2P reserves?
Great question, Dale. So the sizing of the project is built about around the available network access quantity in our immediate region, which is on that 132 kV line. So that has an available 85 megawatts of capacity, and so that's how we've sort of been constrained in sizing the project there. As I've shown through the slide of the farm, there is potential upgrades to the network coming through the region, which would allow for additional network access quantity to be achieved. That could mean that we either expand our generation capacity. The reciprocating gas engines are really easy to expand because they come in 4.5 megawatt units. Or alternatively, if there is additional gas in the area, if the early production from the South Erregulla 1 well shows that we are more in the 2P world than we are in the 1P world, there's a lot of gas infrastructure that is being built in the region. There could be a potential to monetize some of the gas as domestic gas over time. But we will come to that as and when. Right now, we're focused on getting the 85 megawatt power plant built and connected into the network. I think if we've got reserves upside, Dale, that's a great problem to have, and we will obviously look to monetize that in an appropriate time frame.
Cool. And Dale's also asking, should analysts assume capacity credits and AUX revenues only last for the first 5 years? So
new generators can lock in their capacity price for 5 years. And then, as I said, there's potential for the legislation to change to being up to 10 years. However, that's still going through the system at the moment. It would be difficult for me to guarantee that the reserve capacity mechanism will be around in 5 or 10 years' time. All I can say to you today, Dale, is that reserve capacity price may be able to be locked in by Strike on the award of reserve capacity for at least 5 years. And so I think there is a very high degree of likelihood, based on the amount of new generation that is required to be built as forecast by the AEMO in the ESU release last week, that there will still be new generators needing to be constructed between 5 and 10 years from startup of this project. And so that if that is the case, I would expect the state government to keep the reserve capacity mechanism in place, but I don't have a crystal ball, so I can't give you that as a guarantee.
So Dale's also got a couple of questions on the reserves. Were the reserves impacted by the absence of commitment to development, i.e. the power station demand not great enough to develop more than the revised 1 or 2P reserves? Did that affect reserves numbers?
No is the short and straight answer to that one, Dale. So the reserves reflect the total, connected volumes to the South Erregulla eastern compartment. And if you look at the 1P, 2P distribution, it's very tight. So that's obviously come off a very high degree of confidence around the South Erregulla 1 well, which, as you quite rightly pointed out, flowed at 80 million standard cubic feet a day at a maximum rate on test. So we're not limited by our infrastructure. However, as you said, 25 years is a long time to generate the 1P reserves, to produce the 1P reserves. If there is reserve upside, I'm sure Strike will find a way to bring that gas forward.
Yeah, and what risk exists to the 2C resource in the Wodgina? What data is known, and was this interval production tested?
Yeah, so the 2C resource, Wodgina was tested, if you recall, back in 2022. That came on at 35 million standard cubic feet a day and then came down to 2 million standard cubic feet a day. What we will need to do is drill a dedicated well into the Wodgina and demonstrate that we can flow the Wodgina at a pressure of the inlet pressure of the power station, which is great because the inlet pressure of the power station is much lower than the pipeline pressure. So I think that in time we'll be able to ask that second well that will go into the area. We will look to demonstrate that flow test and then convert those 2C to 2P. But we have produced gas to surface. I think the sustained rate was around 2 million standard cubic feet a day, or just under that. And that would be, welcomed at the power station on top of the existing Kingia flows.
Cool. Question from Mark Wiseman. How many new wells need to be drilled at South Erregulla over the project's life to produce out the 45 PJ 2P case and the 82 PJ case, including the Wodgina?
Yep, so there's only one additional well that's currently planned. That well can be completed at both the Wodgina and the Kingia level, which is similarly what we have at South Erregulla 1. At the end of the Kingia life for South Erregulla 1, we will reopen the completion at the Wodgina and then look to produce the Wodgina from that well. The second well that could be drilled into the South Erregulla field, as sort of shown in the South Erregulla reserve statement, there is a potential to look at South Erregulla 3 and whether we might want to sidetrack off to the northwest to interrogate some of the prospective resources that remain up dip. Like I said, we saw some positive gas flows from the Trig Northwest 1 well south of the precinct, up dip of both South Erregulla 2 and 3. So that up dip potential does remain, however, it is quite uncertain. That is why it's been reclassified from contingent resources to prospective. Or alternatively, we may look to just drill a direct straight vertical well at South Erregulla 4, north of South Erregulla 1, up at the northern end of the permit. Cool. Thanks, Mark.
Dale's got another question here. So given reserve certification should be conservative by nature, given there are requirements to prove that the reserves are recoverable and commercial, and this is to effectively ensure a low level of risk. Yet today we've announced a significant downgrade in 2P reserves at South Erregulla. What risk should investors consider to your reserves from other fields?
It's a bigger question than look. I think that the Permian end of the Perth Basin is throwing up some different results than what a lot of the operators have been expecting. We've seen very strong flow rates at Lockyer and North Erregulla. We've seen strong flow rates at West Erregulla, and all those wells at West Erregulla have been flowed and tested. So I think that there is a reasonable likelihood that we can recover the 2P reserves that are currently put forward by NSAI. But there are also wells where there has been some very uncertain results. South Erregulla 2 and 3 petrophysically look like gas wells, but as we've demonstrated, produced gas and water to surface. Trig Northwest 1, produced around 1 million standard cubic feet a day. So there are inherent upstream risks that are within our business. I think as every well gets drilled in the north, you see a new amount of results that will inform your geological models going forward. It's very hard for me to quantify what that risk looks like, except for the fact that the distribution of 1P, 2P, 3P, and 1C, 2C, and 3C is all independently certified and takes into account all the regional results that we have been seeing. So NSAI also do beaches work in the area, so they're very well informed about what the full distribution of upstream results in the Permian look like. The results that you have in the north are completely independent from the results we have in the south. So that's something that the investment community really needs to understand. The Jurassic wells have a completely different profile to the Permian wells. They are generally smaller compartments, but are a lot more. You're getting a lot of strong flows out of those, as demonstrated at Walyering. Walyering, meets nomination every day, and it's been a great result for the company. So, the news flow coming out of the north does not reflect that coming out of the south, and just sort of keep them separate in your own mind. But upstream is the upstream, and I think it's really great that we've found a way to be able to generate a significant more amount of revenue per unit of gas here, which does make up for some of the sins of a reduced South Erregulla reserve, as well as some of the increasing risk profile from the upstream that all operators are experiencing in the Permian across the North Perth Basin.
Cool. We've got a question from Scott Ashton here. Could you clarify if potential unitisation of West Erregulla and South Erregulla gas molecules poses a risk to this power project going ahead?
There is no discussion around unitisation that has been tabled by the West Erregulla joint venture to the South Erregulla owners, which is ourselves, and that there's absolutely no unitisation discussions currently going on. So that should probably alleviate that concern there, Scott.
And then also a question on the financing of the 60 million refi. Can you provide a split of the working capital Walyering West Erregulla portion?
Yeah, so there's a bit of money to be spent at West Erregulla prior to FID. That's just in general owners' costs and preparing for an investment decision at FID. So it's a very small amount of that $60 million is ascribed to West Erregulla. Inside that $60 million, we have compression projects at Walyering. We have an additional well at Walyering that's in there, as well as the existing drilling program that's currently going on, Erregulla Deep, Walyering 7 testing, Erregulla Deep 1 testing on success, Booth and Beacos, non-operated joint ventures with New Zealand Oil and Gas and Triangle, as well as other general working capital. So, the business is very well funded now off the back of securing those facilities. There are obviously the 2 contingent facilities subject to FIDs at both West and South Erregulla. Macquarie has looked at those projects in detail, and they have a very high degree of likelihood of going to FID this year and releasing those funds in order for us to be able to develop those projects.
Cool. Another one from Dale saying, given the higher prices in electricity, are you working on developing any other gas fields through power?
I think, we don't want to get too out in front of our skis here, Dale. Look, let's start with, we're going to have potentially 2 projects in construction later this year with both West Erregulla and the South Erregulla Power Project. And the South Erregulla one, 100%, will be run inside of the Strike development and construction organisations, whereas West Erregulla, the plant will be built by a third party, and Strike will just be completing the remaining upstream activities, flow lines, etc. We are now very much acutely aware of the premium economics associated with power in fully integrated gas to power projects. I think where they make sense is where you have access to land and you have access to existing transmission, and where the costs to connect to those transmission lines are not prohibitively more expensive. I think the company will have a very nicely diversified series of revenues across both the power markets as well as the long-term stable and defensive domestic gas market. And so, we will make a development concept assessment for every project that we go forward with outside of the ones that are already in the pipeline, as and when based on the infrastructure that's around us. Look at Ocean Hill, for instance, that's blessed by having both transmission lines and compressor station / pipeline running across its back door. So that's going to be a really interesting one for us, but does represent a very high quality of hydrocarbon that requires very little processing to get into the pipeline. So the economics may be stronger as a domestic gas project than they may be as a power project due to the very little capital as demonstrated at Walyering required to come online. So horses for courses, Dale. We'll keep the market informed as to where we're going, but I really like the diversification that the company's going through. And I think by linking our gas assets to the reduction in coal and the increase in the reliability of renewable power in Western Australia really does position the company well as a long-term sustainable supporter of a lower carbon Western Australia, which is what I think we all want to see in the long term.
Yeah, great. Mark Wiseman has another question. AEMO highlighted a prelim shortfall of 10 megawatts, given large amount of already committed capacities, 990 megawatts. Could you help us assess the chance of Strike getting awarded capacity, or what do you see as the key risks there?
Yeah, so we wouldn't have made this submission on Friday evening if we didn't think that this was a project that was needed. And that's also been demonstrated by both the support that we've received in letters of our application from the Deputy General Director of DMIRS, JITSI, as through our lead agency service, as well as as I said, that Western Power letter as well. So that's a really strong amount of government support. I think if you look at the rhetoric out there around, new gas-fired generation is needed, this is complementary to the existing supplies that are coming through the area. We won't know this. We won't know whether we've been awarded capacity until August. But on that, on the basis that we do receive capacity, that pricing will then come out in October. As shown in some of the charts today, the age of some of the gas-fired generation in Western Australia is getting right at the top end. It's similar ages to a lot of the coal-fired generation that we have, and also there is currently an absence of peaking generation in the north, where the old gas peaker, the Mungara gas peaker, is currently only operable for black start capacity, and it's 34 years old. So the northern end of the Swiss has consistently been brought up in political forums, as well as by advocates of investment in the Midwest, as being an issue. And so therefore, I think that this is a power station that can create a firming capacity in the region that would be strongly supported by government. So, fingers crossed, capacity, we'll find out in August. And Mark, I'll make sure that, we let you know directly as we do with the rest of the market.
And Declan has a follow-up to that. So he's asking, what % risk do you see for the likelihood of the reserve capacity credits, and also the connection to the Swiss?
It's difficult for me to give you a risk, except like I said in the response to my last question, all of the independent modelling, third parties, Western Power, etc., have all been pushing us to indicate that there is reserve capacity available. Particularly, there's a network access quantity available in the region on that 132 kV line. So the likelihood, I would say, is fair. However, there's no guarantees in life, as up-dip wells of a gas discovery at South Erregulla sadly proved to us. The second part of that question was around the reserve capacity price.
No, just a % on risk to connecting to the Swiss.
Connecting to the Swiss. So, like I said, we've received a letter of support from Western Power for our plan to connect to the Swiss, and the time frame to that. So, the project, to be clear, in August we will find out whether we've got reserve capacity. In October we will find out the pricing of that capacity, and then we will receive reserve capacity credits subject to receiving a minimum network access quantity, or a NAC. That network access quantity will then be awarded by Western Power shortly thereafter, and at that point in time we're in a position to take an unconditional FID and commence construction.
Cool. And one from Scott Ashton asking whether the start date of October 26 would you consider that a P50 outcome?
No, I'd say that that's our currently planned P90 schedule for the project. We're making a commitment to the AEMO that we can bring this field and this power station online by October 2026 to demonstrate that it is there for the capacity year 26-27. So the whole project has been built off being able to need to meet those commitments. Our engagement with the engine manufacturers has been around those timeframes. Our engagement with Western Power, which, as I said, supports the timeline and the connection to the grid in that available opportunity. And we're very blessed by having access to the land on which we'll construct this project on. So the landholders are very amenable to starting works and using the area as required. And we've got really strong support from our local communities and stakeholders as well, the farmers in the region, the shires that we're working amongst. And I think Strike has consistently demonstrated that it is a regionally focused developer, and so those good relationships will be relied upon in order to be able to meet that time frame as well.
Cool. We've got a question here from Anonymous. Any comments on the Hancock shareholding of just under 5% reported in the Australian?
There, no need to make any comment. If there was a shareholding above 5%, a shareholder is required to make a substantial shareholders notice, and you should just keep an eye out on announcements around the STX ticker if that was to be the case.
Cool. And one last one from Declan. What is the main contributor to the 2P reserves downgrade around South Erregulla 1? Is it reservoir thickness or quality or compartmentalization?
So South Erregulla 1 had an excellent quality reservoir. So the way that the modelling worked for the South Erregulla reserves and resources was an assumed thickening towards the west, towards the Bahara Springs Deep 1 well, which is due west of South Erregulla 1, where I think they had about 38 metres of net gas pay. So we were going from the 14 metres at South Erregulla 1, like a wedge towards that western side, and an assumed thickening. What the South Erregulla 2 and 3 results, which had 16 and 18 metres of net gas pay, demonstrated is that thickening isn't as thick as was previously modelled. And so that's pretty much where most of the downgrade on the 2P reserves on the eastern side of the field have come from, as there's quite a lot of gross rock to the west of the South Erregulla 1 well, but still in the eastern compartment. And that obviously is not modelled to thicken quite as dramatically as was first assumed after the drilling of South Erregulla 1.
Cool. All right. Well, we don't have any other questions that have come through. As I said, we'll get this up on our website as soon as possible so that anybody who missed any of it can watch it there. Otherwise, thanks for joining us and have a great day.
Thank you, everyone. Have a great day.